Hi and welcome back to today's morning report on Tuesday the 14th of April with me, Richard Perry, market analyst at Tech Markets. Moving on to the euro dollar now, and we've now seen 6 completed negative candles in a row, 6 down days in a row, and it doesn't look as though it's picking up anytime soon really, although you could argue there's a very slight slowing of the selling pressure, and that slowing has just started to see these stochastics just arguably just bump along the bottom. But look at this, looking back at March, for example, you saw the stochastics along the bottom for a couple of weeks really, during the big selling pressure. So I don't really see that as a positive to look at. I'm focusing far more on this crossover on the MACD lines, which happened at the same time in early March, and then bang, you saw a big selling pressure on the euro. So that's crossover, I think, is a negative to be sure. Now, I think also we're going to be seeing a test of this 104.56 low, which to be honest is actually pretty much the last real support you get on euro dollar dating back to 2003. Let me show you 10 years, and then even more than 10 years, because you've got all these back from 2003, these lows here. But I just see that parity is now, if that 104.56 level goes, then I think we're looking at parity. Obviously it's 450 pips to the downside, but it could be quite quick. All the outlook on the momentum indicators are bearish across the board. Just everything looks still pretty terrible longer term on the euro. Now, nearer term, as I said, there's a very slight slowing of this selling pressure, and that has now taken us outside of this downtrend channel that we had been in. Slight pick up in the momentum indicators, but I still think you're in bearish configuration really. The MACD lines have actually just rolled over again underneath neutral. That is certainly not good. Very slight pick up in the stochastics on the hourly, so that might suggest more of a consolidation than any sort of rally. But just zooming back in, you'd say you'd really need to be breaching through, get the crosshair going here, breaching through, 106 sort of 20 area towards 106 sort of 35. That's your sort of basis of resistance, sort of caps these highs here, and also the low there along with the high there around 635. So I think that's sort of 15-20 pips worth of resistance that you really need to bear in mind. I think if euro got through that, then maybe there is something in a bit of a recovery, possibly back towards that 107 area, 107 being that big breakdown area that we had a couple of weeks ago. So interesting, but yeah, just a very slight slow. But I still see that the euro is going to test in due course. I think any rally is a chance to sell. I think ideally, I say ideally, if you got a rally towards 620 to 635, I'd say probably that is your or a chance to sell. I think the ideal one would be the neckline of that big breakdown at the top, because that is that level there on the daily chart. So that would be probably the ideal point to start selling euro again. But I still think I think this is a consolidation move rather than anything else. I think looking at the hourly RSI again falling over under the 60 point, around 55, MACD lines falling over underneath neutral. And yeah, I think maybe if you saw the stochastics rising back towards that sort of 50s, 60s point, maybe that would give you an area which you might start to think about selling again. But yeah, I think there is possibility of a slight rebound, but I'd be selling into it. Anyway, I wish you good luck in your trading on euro today, and I'll speak to you later. Thank you.